Hello, this is Nathan speaking.
Hi there, this is the ATO and we've heard you made some profits on your crypto.
Wait, what? I thought it was decentralized, you can't even track it. I thought I didn't have to pay tax on my crypto.
Bad luck, buddy, you do, because we see everything. And it's time to pay up, bud.
Now I'm here to talk about taxes and how it's gonna work regarding your cryptocurrency, provided that you are in the green. But at the same time, if your portfolio is currently in the red, then no! So if you're new here, my name is Nathan, welcome to the YouTube channel, and I talk about all things under the financial umbrella. If you haven't been living under a rock this year, chances are you've currently got at least a single dollar invested in cryptocurrency. And if you've made any money on that, chances are you gotta pay taxes. But don't be sad. Here's a photo of a cute puppy to cheer you up. And now that I've done my part, be sure to smash the like button for me, and we know your time's valuable, so you can watch this video faster. Now just remember, I'm not an accountant and this is not professional tax advice. I'm just clearly showing what I plan on doing, and in your own personal situation, you should always consult your own accountant. Remember, don't trust a guy that shows you all these cute little puppy photos on the screen.
Not at all.
So you can actually treat your cryptocurrency gains or losses similar to how you treat your shares. When you sell your shares in the stock market, you're actually paying taxes on the gains that you make from those shares, or you can actually offset your taxes on the losses that you've made. Now the difference you may notice between cryptocurrency and the stock market is that cryptocurrency is provided and seen as digital currency, whereas shares within the stock market is more so seen as partial ownership in a company itself. So what this means is that there's very limited things you can do with shares, but when it comes to cryptocurrency, there's actually multiple ways that can actually trigger or flag a capital gains tax event. So the three ways I want to talk about today is selling or gifting your crypto, exchanging your crypto into cash or fiat currency, which is AUD or USD, and the last one would be actually exchanging one crypto coin to another crypto coin, for example, Bitcoin to Ethereum. This means that by those three ways, you're actually triggering and recording a taxable event. Whether this might be using one coin to buy another coin, or just simply churning your coins into fiat currency or exchanging it back to AUD. Now just remember that cryptocurrency has only been around for roughly 10 years, so the space itself is relatively new. So I'm actually going to pop a link in the description below by the ATO, which actually from their end describes what they see as a taxable event and what they see as more so personal use. So I really think you should check that out if you have invested in cryptocurrency, just to understand what you're really in for. Now I mentioned capital gains a few times prior, but let's really talk about what it is. Capital gains actually refers to the capital asset's value, and it's realized when the actual asset is sold. It can actually be split into two ways. It can be turned short-term capital gains and also long-term capital gains. Both of them are essentially taxable events. So short-term capital gains refers to any profit that's made within one single year, and you actually need to pay tax in accordance to your own current tax bracket, which I'm actually gonna pop out as a table here. This means that if you bought one Bitcoin worth $3,000, congratulations to you, and you then sold that same Bitcoin for $20,000, that means that you're actually recording a capital gains tax event of roughly around $17,000, and you'll need to pay tax on that $17,000 itself in accordance to your tax bracket. Long-term capital gains is actually much more beneficial because the ATO doesn't really want you to be day trading your life away. But what they've done and what they've prepared is for long-term capital gains, which means that you've had to have held your asset for longer than a year. They're prepared to actually reduce it by half, which is 50%, which means you're only going to be paying taxes on 50% of the gains that you've made. So instead of that $17,000 gain, you're only paying tax on half of that, and that's a massive discount. Now, if some of you coincidentally bought at the peak and now currently riding a potential dip or a market correction, you might actually ask me,
Yo Nathan, what about capital losses?
and I'll say,
We don't talk about those here.
nah, just kidding. But essentially, when you do sell one of your cryptocurrency coins, whether it may be at the peak all the way down, you may actually incur a loss. And what you can do is you can actually offset your current taxes based on that loss itself. So if you've realized a loss of $17,000, you can actually take that off your current amount, which means that you'll be paying tax on your total amount minus that $17,000. Now there's some exceptions when it comes to paying your capital gains. Number one, when you actually have less than $10,000 in cryptocurrency and you're only using it specifically for goods and services and using and exchanging that cryptocurrency itself, it's considered personal use and the ATO won't see it as a taxable event. So you won't actually have to pay any tax on that. Number two, any kind of crypto donation is actually put through and not seen as a capital gains, but rather you can actually then use it to offset your taxes itself, much like any other donation. And number three, which is what most people call the sunken boat situation. but essentially what it relies on is if you've lost or your cryptocurrency has actually been stolen. So for example, if you put your cryptocurrency into cold storage and you've suddenly lost your private key, whether it may be on a boat or whether maybe someone stole it, then the actual cryptocurrency itself cannot register as a capital gains tax event. And if anything, the lost amount or the stolen amount on the value of that day itself, in which case it was lost or stolen, actually then registers as a capital loss. But at the same time, this is probably one of the most sketchiest things and you probably will get caught. So to finish off, you're probably thinking, what happens if I just sell my cryptocurrency off and convert it into fiat currency, AUD, and then just decide to buy a Porsche or a Lamborghini? How would you know? How would the ATO know? The ATO actually has a lot of data and they've combined with a lot of exchanges, most reputable ones that you're currently using, to help record all the data that you're buying and you're selling. So the ATO generally has access to all the data, which means that they can see how and why you're selling and where exactly you're buying. So if you think you're gonna get away with it, you're definitely not. Now this video shouldn't be used as your one-stop shop when it comes to tax and cryptocurrency. Always consult a professional, go to your accountant, talk to them about your situation depending on how much cryptocurrency you have, how much gains you have, are they realized gains or are they just paper gains? But do your own due diligence in terms of your own situation. I did want to finish off by saying that this is just done in my own personal situation, but at the same time, it could be much more complex depending on how you're doing it, whether you're an investor, whether you're a trader, which we can definitely go into more detail in another video. But at the same time, I just wanted to go through the nutshell basis of how to do your taxes when it comes to cryptocurrency. So be sure to hit the like button on this video, subscribe to the channel where I post weekly, and hit that little notification bell to know exactly when that is. If you currently aren't invested in cryptocurrency and want to be, it's definitely not too late. We're still within the point of the bull run. All you need to do is actually create an account on COINSPOT where you are entitled to $10 worth of free Bitcoin if you use my referral code or the link which I'm going to put in the description below. And from there, you can actually buy and sell cryptocurrency based on a certain amount that you want. So these videos here are definitely going to help you. But until then, I'll see you in the next video.